Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures. Thanks for joining us. We had a lot of news over the past week, and we have a special guest in the studio, so let's get started. Hambleton Partners reports that global automotive technology M&A activity was down by 11% in the first half of 2020 compared to the second half of 2019. But while deal flow has been light during the first few months of the pandemic, we're starting to see things really heat up. One of the reasons that investors are getting more confident is the health of auto dealers. We're going to have an exciting Q3 earnings call season for the publicly traded automotive dealer groups. Group 1 Automotive just announced that they expect Q3 earnings per share to triple. Lithia Motors anticipates third quarter net income to be up to 76% higher than last year. Dealers are recording record quarterly profits, largely due to reduced employee, operating, and marketing costs, coupled with strong new car and used car gross profit per unit. The key question is whether dealers will be able to keep operating lean as the economy rebounds, as they may be tempted to add back operating costs. The New York Stock Exchange expects this month's record pace for initial public offerings to continue. September was the busiest month for IPOs in the exchange's history, and October is on track to also break a record. 2020 is very likely to turn out to be the biggest year ever for IPOs since 2014. How upcoming IPOs perform will be a big test of the stability and strength of the US stock market as we head into the final quarter of what's been a very interesting year. Software has been hot. SaaS Capital reports that public company software as a service revenue multiples continue to skyrocket, recently reaching 15 times average revenue run rate, which is the highest that we've ever seen for software valuations. Investors clearly love the SaaS model. It seems like we can't have a Friday Five without highlighting the Special Purpose Acquisition Corporation, or SPAC. Challenged electrical vehicle manufacturer Faraday Future plans to deliver its first electric luxury SUV, the FF91, 9 months after securing funding. Faraday wants to raise $800 to $850 million to launch the FF91 via a SPAC. Once one of the more hyped EV startups, Faraday burned through $2 billion in cash, and its founder, Jia Yuting, completed his personal bankruptcy filing in June. And Romeo Power Technology, a battery maker for electric vehicles, will go public through a merger with SPAC company RMG Acquisition Corporation in a $1.33 billion deal. Online automotive retailers continue to be hot. Carvana's market cap of $37 billion is definitely increasing investor interest in the automotive category in general. Shift Technology should be a public company within the next week, so we're keeping a keen eye on that one. UK online retailer Cazoo just launched 10 months ago. After a financing round last week, the company is now valued at $2.5 billion. A lot of investor interest has been fueled by consumers shifting their shopping preferences due to COVID-19. I'm certain that we're going to see a number of online dealership players emerge, given the frothiness in this market. Private equity players TPG and Onyx are preparing offers to acquire fleet management business Donlen from Hertz in a deal that could value the unit around $1 billion. Donlen specializes in fleet management, automotive leasing, and other related services. Hertz would use funds from the deal to pay down a debt load that had reached $24.4 billion when it filed for Chapter 11 protection back in May. Donlen made about $100 million in profit last year. Hertz bought Donlen for $947 million, including debt, back in 2011. And finally, let's get to today's guest. Physical dealership buy-sell activity in the first half of 2020 surpassed the first half of 2019, despite the economic challenges of the recession. Sellers grew more confident in their valuation expectations as earnings surpassed pre-COVID levels. With that, I'm excited to welcome the Presidio Group's president, George Karolis, to the show. Welcome, George. It's great to have you here.
Thank you, Steve. And first of all, it's an honor to be here with you in CBT News today. The market is quite robust. Dealers are feeling, as you said, more confident, and earnings are strong. And that's led to an uptick in M&A transactions and overall confidence in the resiliency of the dealership model.
That's great. And you guys are just coming off a deal this week, I understand. Tell us more about that.
We did. This year has been a very active deal for us. We've actually closed over 35 dealerships since COVID began. And this week we closed on the sale of Infiniti of Memphis to Gossett Motor Cars. Infiniti Memphis is owned by Joanna Ellis Reisinger, our client, and we actually sold her iconic Mercedes dealership in Atlanta here, Atlanta Classic Cars, on March 16th. Ironically, pretty much the same day most of the shutdowns around the country were beginning. So we were pleased to sell her other dealership, her family's dealership, this week and culminate their journey.
Great. Well, congratulations on the deal. So you have a good story. Apparently there was a little bit of disruption this year with COVID around the biggest deal ever, but you want to give us a little bit of info on that?
Sure. I think you're talking about the Park Place transaction, which we closed about a month ago. Park Place, a group of luxury dealerships in the Texas markets, primarily Dallas, which we believe is the largest transaction ever in the industry aside from the Berkshire Van Tuyl transaction. But it was quite a journey and a roller coaster with that one. It was scheduled to close a little bit before COVID and the shutdowns occurred and was called off temporarily. And then, of course, the whole world knew about it because it was a highly publicized transaction. And so that led to some buzz and some activity for sure surrounding it. But in the end, Asbury came back to the table and was able to get the deal put back together with our client. And we're excited that the deal actually closed. And the market continues to be very strong on the heels of that.
Well, congrats on the deal. And why don't we dig into that? So what are you seeing out in the market right now? What's your temperature?
Sure. With the rise in popularity, again, of the personal vehicle, safety and mobility is driving that. Of course, we have had a perfect storm of pent-up demand, historically low rates and availability of capital. And of course, with OEMs having to shut down for some time, the availability of inventory has led to really strong margins for dealers. That, with the resiliency of the model and the variable nature of the dealer model, where dealers cut expenses, didn't bring a lot of them back to historical levels, has led to this perfect storm of high profitability and strength among dealers. And so with that, we're seeing really robust demand for dealerships. There's with over 8,000 dealers, there's always a market for sure, and there's dealers that are in various stages in the cycles of their ownership, and there's always sellers. And of course, the buyers are there today because of the strength and resiliency of the model.
Cool. So what is it about the market right now that has so many sellers raising their hands, ready to sell?
That's a great question. There's always a market and there's always sellers. There does seem to be a little uptick in deals on the market for sure. That's driven by a lot of things. One, the industry is still quite fragmented, and with over 8,000 dealers, there's always dealers in different cycles. Of course, we always have the dealers that are aging and don't have succession plans. We have financially minded dealers that have been through a lot of cycles, have sort of seen this before, and some think hey, this is a good time to sell, or again in a good value cycle here for a transaction. And then, of course, on the buy side, we have a lot of generational dealers that have long-term goals. Again, aside from the publics, which are active, and Lithia is leading the charge here. And you've seen a lot of activity, with Asbury Park Place. Lithia bought one of our other transactions in Texas, large transaction, the John Eagle Group, a little over a month ago as well. We're seeing a lot of activity from the publics, but the privates are really leading the charge as always. Historically, private dealer transactions have accounted for over 90% of M&A transactions in the space, and that's going to continue. It's for many private dealers, this is the thing they know. It's a great place for ROI and for capital appreciation. They believe in the model, and with many that are generational dealers that have long-term plans, they see this as an opportunity. Once again, the model's been proven, the resiliency has been proven, and they believe it's a good investment. So there's a market. There's buyers and sellers. It's well balanced right now, and we see that continuing for some time.
That's great. So if you had to look forward 9 months into 2021, what do you expect the market to be looking like?
Yeah, that's a great question. Again, we closed over 35 dealerships to date since COVID. We have another closing this weekend, another one in a few weeks after that. So we expect, just from our business, additional closings, and we know some of our friends that do what we do have a lot of closings that are going to occur as well. So we see a really robust level of activity and closings this year. But our book of business, just Presidio's, from our vantage point alone, we have over 60 dealerships that we're either at market or going to be at market on soon, most of which will close in the first quarter of 2021 or early second quarter 2021. So we actually see our pipeline, our activity likely doubling, at least doubling in 2021. So we think activity will continue, if not it'll rise.
That's great. That's good for the market overall.
Absolutely.
So last thing, give us a little bit of a rundown on the business. Presidio's, you guys have grown quite a bit recently. Give us a little bit of an overview of the company.
We sure have. Yeah, this has been a record year, of course, on the dealership side for Presidio, and we're so honored to represent, iconic names in the industry such as Park Place, John Eagle, Atlanta Classic Cars. We did another platform transaction that wasn't disclosed, just our client wanted some privacy. So we've had a record year and on the automotive dealership side, but we also have an automotive retail services division that we've built up and are quite active on. And that group serves all businesses that touch dealerships that aren't dealerships. So primarily technology companies, but all retail services companies that are in the space. We have several transactions that we're engaged on in that space today, and many more to come. We have a lot of activity, and we're having a lot of dialogue. That, as you said in your opening remarks, we think M&A activity will be robust on the tech and services side in the industry as well, and we're excited to be a part of that.
Well, great. Well, thanks for joining us today. It's great to get a good update, and it's great seeing you again.
You too, Steve. Thank you so much.
Okay, thanks, George.
Take care.
Thanks for tuning in to CBT News for this week's Friday 5. We'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.